Okay, so now let's get to it, guys. So I've recorded the meeting. So now we have been at this level for quite some time, isn't it? Is everyone okay with that? Can everyone follow? Can everyone see? Right? So we have been in this situation for quite some time, right? Whereby like we have seen the dollar index continuously increasing strength, right? So one of the things that we do understand is that like through this consolidative state that we currently within the market, because it has been in a consolidative state, this consolidative state can be regarded as being a problem, right? So a push to the upside, that's a reaction, right? So now, with all the talks of inflations, right, we have seen the war, it came, we understand what has been occurring within that, right? So there's been a disruption of the supply and demand chain. Are we okay? Supply and demand chain has been disrupted, right? So now we go back. I think like one of the things that we need to do as traders, remember that like regardless of whether we want to trade or not, but first of all, we have to firstly understand why do we need to see the reduction in the value of the dollar, right? So based on what we have seen this year, right, we've seen that though we can see a possible reduction in the value of dollar based on the current rumors or current talks of inflations, right, this itself, it's not the only catalyst or the only driver that can result in the reduction in the value of dollar index, right? So the war came, we saw what has been occurring throughout, right? So now my question arises, the what do you call this thing? COVID came and went, the dollar still held steady, right? Right now, there's this current fear of a breakout of the second pandemic, which is the monkeypox, right? Though we see those things, right? So now let's look at the impact on supply chain when looking at Russia, right? Are we okay with that? So now, this is not conspiracy, by the way, guys. You've got is it bricks? Bricks. Okay. Are we okay? Can you guys follow? Abby, you must say something, right? We've got bricks, right? We've got bricks. We've got bricks. We've got the other one, NATO. So this is two individuals that are consistently at war with one another in terms of who gets to rule, right? So whoever has power over the food supply, right? We can say that that person has power, isn't it? Are we okay? So like last time when we spoke about the we spoke about the relationship between Russia, India, and China, right? So first of all, we spoke about the fact that right now, when we look at wheat, right, one of the countries, or one of the countries or nations, well, let's just say countries that had the most reserves when it comes to wheat, it was India. But then India said that the majority of their wheat got burnt during there was a heat something, right? A heat wave that burnt majority of its reserves. So now, upon that occurring, China now has basically control over the food storage. Their storage, they have more storage in terms of food. So now that can be used as something like of a negotiating factor, right, when they want to negotiate better deals. So that's one thing that we have. So now let's go back and then look at the current activities that have been occurring between Russia and Ukraine. So Russia and Ukraine, what has been occurring is that this conflict itself disrupted the supply chain of both of wheat and of oil, right? And oil that comes from Russia is a bit different from other regions because its density, it's a bit thicker. It is more dense, right? So that itself, that's those factors that are affecting the current supply chain as well. The current supply chain, we're talking about the production of oil itself leads to the import and export of goods. Are we okay with that? So now, means while we understand what has been occurring, or what has been like occurring, let's just put it this way, right? So now my question arises: what are the largest producers of fertilizer? Let you see like where I'm going. The largest producers of fertilizer. You know, Russia is one of the largest producers of fertilizer, isn't it? Russia is one of the largest producers of fertilizer. India is one of the largest consumers of fertilizer. One of the largest consumers of fertilizer, if I'm not mistaken, right? So you get to see these things unfolding in a proper manner. So now one of the reasons why the US or the dollar might be rising in value is that the US itself does produce fertilizer. In fact, in 2020, I think it was in the top 5. The companies that were producing fertilizers, they were there in the top 5. So now let's go back and then look at why, for example, in South Africa, most people are complaining about the increase in the amount of cooking oil, right? But now, having to factor in and ask yourself, okay, if the cooking oil gets to be this expensive, what is the leading factor towards it being expensive? Because remember that the land in which the sunflower, let's say we're looking at it from sunflower seeds, right? The land in which the sunflower it's grown, it's cultivated and everything. So that land needs to be replenished consistently, and the consistent replenish of that land requires fertilizer. So now you get to understand why the cooking oil it's a bit expensive. I just chose this one just to kind of like show you where we're leading to, right? So now one of the reasons why the DXY might be increasing in value is that some of the factors such as like the fertilizer, a doubling in the value of fertilizer does increase, kind of like give the US a bit of a bargaining chip when it comes to the distributions, right? I think, is it Brazil, Russia, South Africa? S is for South Africa, man. So India, China, and South Africa. So South Africa is just, it's kind of like a bystander. South Africa is like, it's like hazard, you know. South Africa is like hazard, you know. Everyone wins, but you know, you get to win. That's, if you want to look at it that way, just that's South Africa for you. That's hazard. You know, we win the UCLA, UEFA Champions League, and then he automatically wins it. You know, it's just that guy in the group project that just, you know, automatically gets marks based on what others are doing, you know. So that's it, right? So now those things can be leading to that, right? So now let's say that we get to a position whereby the China gets to negotiate better deals, Russia gets to negotiate better deals, because though this ongoing war might be occurring, the thing that still remains is that like they still need to trade, right, with other countries. Like the US, it can impose sanctions as many times as it wants, but it still needs to trade, right? So with that being said, now let's look at what can lead to the probable decline in the value of DXY. So the value of DXY right now, we can still expect it to continue pushing a bit further, because as long as majority of the people still not accepting the fact that inflation is upon us, actually we're already in an inflationary state already, right? Because everything is expensive. Like the amount of money you used to buy grocery with back in 2019, you cannot buy the same amount of items with the same amount of money. Not even a fraction, maybe half of it, if possible, right? So with us expecting a reduction in the value of DXY, currently, at this moment, I think it's a bit far-fetched, right? I think we're still expecting a bit of a push to the upside based on this thing, looking at it on this being a possible monthly time frame. One can actually even go to the length of saying that the probabilities of us seeing a potential reduction in the value of DXY could be next year, March or April. What do you think, guys? Next year, March or April? So what do you think? So the probability of us seeing that reduction in the value of DXY could possibly be next year, March or April. What do you guys think? Guys, I'm talking to adults here. It's a question. Okay. Now, possible rally through the remaining year, then next year drop. You see, that's the proper probability. Maybe Jan year as well. January, probably, but like, remember that like right now we halfway, right? We halfway, and based on this, the pushing up to the upside, you know, we needed a bit of strong force to break above this area here. But what we can see is that like majority of the things have been liquidated somewhere around that area there. So that region there shows that we have liquidated some, but there's still that sense of belief that the probability of the dollar declining in value, it is there. So you understand? So that's one thing that we can look at. It's possible cup and handle formation. Where? Oh, yeah, but like Lindo, I think we should be passing that stage because like the reduction in the value of the DXY, even though it might be there, we're looking at this region here, maybe to retest the controlled price. So if we can get maybe a minor retest of the controlled price, that itself can result in what like possibility of a further continuation of a rally. But now, if we do get that reduction in the value of the DXY, now that itself can actually result in the prolonging the current consolidative state, right? So when you prolong the current consolidative state, you still give the probability of a rally. You know, you still have that probability of a rally before we can have a drop in the value of the DXY. You understand? Because if the market does, if let's say maybe we do get that retracement push into this area, the fact that we're still trading within this entire region, right? The fact that we're still trading within this entire region. So we know that this itself, we cannot actually regard it as being a breakout, right? Because it can just end up being an excess price, right? But now let's look at let's say maybe like, okay, there is that probability that we might actually end up coming back to retest the control price, right? Let's say that we might get the probability of retesting the control price. But even though we get the retest of the control price, now that itself increases the probability of a further push to the downside in order for the market to create an excess price before the continuation of a rally. So now we're talking about 2 to 3 years now or more, right? But now look at it from this perspective. Okay, look at it from this perspective, right? Let's say maybe we look at it from this perspective. We focus more on the closing price, right? So if we do focus more on the closing price, this now gives us at least a bit of a probability of a continuation of a rally, right? So now you have all this multiple retest of this supposedly a resistant level, right? So the resistant level itself, what it does is that it creates a bit of a stigma in terms of people expecting price to decline based on the fact that it has retested an imaginary level that is supposed to hold, right? Are we okay? So now, once you break above this area here, what you are doing now, you are actually forcing people to change in perception, like how they perceive the market. Now they're going to change. So now they still people that have an expectation of the drop in the value of DXY, right? So now once you break above that area significantly, because now this is not a significant breakout, right? So this is not a significant breakout. Are we okay? So now this is not a significant breakout, right? The fact that you have, oh, it broke above it, then no, this is not a significant breakout. Are we okay? Could we possibly see a reduction in the price to trap the early buyers? The probabilities are there that we might see a reduction, but the probabilities are not as high as the probability of the market breaking above, right? Because now let's look at the initial factor, right? The previous month, we had a spike to the upside, which resulted in the market closing in a bearish candlestick, right? The bearish candlestick itself is a reflection of a probability of a reduction in price. Therefore, getting more people interested in taking short positions. Those that already took short positions, their main objective now is to try and protect themselves, right? Because if you want to, let's say maybe you took short positions around this level here, right? And then the market pushed a bit further to the upside, whereby you did not close or you were not forced out of your positions. So what is the likelihood that you're going to try to hedge against your losses? Because you're going to try and add more position in order for you to cover up the already existing loss that you are currently within. And that itself does create an increase in the amount of sell side liquidity, giving rise to the probability that we might break above this entire region to force liquidate everyone. Because like if you are at a region whereby now there start to be an increased dominance in terms of sellers, if you are looking at it from a buyer's perspective, you've got more sellers that are coming into the market, therefore giving you an opportunity to buy with your orders being matched almost instantaneously. Are we okay? Are we okay? So now, if a position consists of a lot of, like this is something that is relatively straightforward. We know that at this region here, people should be looking to take potential shorting opportunities, isn't it? But the spike above this area here does represent something. It actually shows you that there are certain people that got out of those specific trade, right? How are we able to see that there were people that got out of a specific trade? Look at the initial spike, which is this one. So the spike above that area, this one spiked above this entire highs, right? So now if you have a lot of people that are placing short positions relatively around this level here, right? Once you spike above that area, there are stops that are located above there. You spike above, what occurs?